Hello everyone, welcome to my channel Commerce Compass, where I will be teaching cost accountancy, income tax, statistics and financial accounting. So stay tuned and hit subscribe for more amazing content. So let us start with today's topics, residential status. This is our second class in this topic. We have already taken a class and we have discussed the basic principle of residency. So before starting to solve the problem, we just remember the rules. What is the basic rules of residency? One is 182 days or more during tax year. Another one is 60 days in the tax year and 365 days during 4 years preceding tax year. This is the basic rules. One has to fulfill either A or B to become resident person. To become that resident person to ordinary resident, two additional condition, that is, one is 2 years out of 10 years residency, okay, and 730 days during 7 years preceding tax year. Okay. So this is the additional condition to become that resident person become ordinary resident. Now here is an exception of basic rules. If an Indian citizen Indian citizen lives in India for employment purpose, section 6(3), that is only one condition is required to be fulfilled, only 182 days. Okay. Similarly, Indian citizen or a person of Indian origin coming to India for visiting purpose, then under section 6 subsection 4, only 182 days residency in India in that tax year is required to become resident in India. Okay, so these are two exceptions. So let us start to solve this problem. Mr. X, an Indian citizen who is appointed as senior tax officer by the government of Libya, leaves India for the first time on 25th September this for joining his duties in Libya. During the year 2026-27, he comes to India on a visit for 115 days. Okay. Now determine the residential status of X for the previous year 2526 and tax year 2627. Okay, so let us see. Here is leaving India in the year 2526 and year 2627. He comes to India for visiting India for 115 days. So see, there is the years. 2 years are there. Years. Okay, 2025 and 26, 2026 and 27, and year of stay, period of stay during 2025 and 26. He is leaving India 25th September. Then after 25th September he was in India. So for this financial year, from April 25 to 25th September 25. There is number of days. If you count, you will find 178 days. Okay, 178 days. Now here also a visit to India and stays in India for state where it has been given 100 and this is the data. Okay, now come to the conclusion. Now in case of this year 2025-26, X leaves India. Okay, leaves India. In that case, under section 6 subsection 3, only 182 days. Okay, residency is required. Okay, during relevant tax year, but he resides only 178 days. Okay, then he is non-resident. He is non-resident. Understood? Because for basic residency, two conditions required to be fulfilled. But in case of a person living India for employment purpose, in that case, second condition is not required to be fulfilled. Only one condition to be fulfilled, that is 182 days living in India. But he had lived in India 178 days, less than 182 days, and in that year he is non-resident. Okay. In this year 2026-27 is the same part. Person comes to India for visiting. Then under section 6/4, only one condition to be fulfilled for residency, that is 182 days in the relevant tax year. 182 days in relevant tax year. But he stayed only 115 days. Okay, then he is non-resident. Okay, then he is non-resident because fails to fulfill the condition of 182 days. In this case, both conditions are not required, only one condition required to be fulfilled, that is only 182 days, but he fails to fulfill, he only stayed to 115 days. In both the cases, X is non-resident, status is non-resident. Okay, I think it is clear. Non-resident. Liability to pay tax depends upon the residential status. Different types of income, whether taxable or non-taxable, can be easily identified from the table I have given here. So, let us see the taxability as per residential status. So here is types of income. Here is resident and ordinary resident. Here is resident and not ordinary resident. Here is non-resident. So in case of income arising in India and received in India, that means income accrued in India and received in India, in case of all resident, whether resident, ordinary resident or non-resident, it is taxable. Okay. In case of income arising in India but received outside India, the case is the same, taxable, taxable, taxable in all cases. In case of income arising outside India but received in India, this is also taxable in all cases. Income arising outside India but received outside India, in case of resident and ordinarily resident, it is taxable. In case of resident but not ordinarily resident, it is non-taxable. But it is taxable in case of resident if the income is derived from business or profession controlled from India. This is very vital language, controlled from India. Income will be taxable. That means income arising outside India and received in India, in case of resident but not ordinarily resident, normally is non-taxable, with the exception that if income is derived from business or profession controlled from India, that income is taxable. And in case of non-resident, income arising outside India and received outside India is non-taxable. Past income brought into India is non-taxable in all the cases. So, if we remember this table, it will help you to sort out the problem as per residential status, which income is taxable, which is not taxable. You try to remember this table to solve the problems. Let us take an example. We have already taken two problems. Now we will directly start problem number 3. So let us see. X is an Indian citizen. Currently he is employment with a multinational company and posted in Singapore. During the tax year 2026-27 and 27-28, he comes to India for a visit of 100 days and 145 days respectively. In earlier 4 years, he was in India for more than 1200 days. He wants to know his residential status for the tax year 2026-27 and 27-28. Okay. So his annual income is given for both the years. Income from salary, income from business, income from other business, interest on bank, fixed deposit, any other income, life insurance premium paid. Would it make any difference if X is a foreign citizen but his grandfather was born in a village near Karachi in 1946? So also see the problem carefully. X is Indian citizen and comes to India for a visit for 100 days and 145 days during the 2 tax year. So in first case, say tax year 2026-27, he is in India for 100 days. So someone who visits India for less than 120 days, coming to India less than 120 days, he becomes a non-resident. Okay, he is non-resident. So this year he is non-resident because visit to India less than 120 days. This is exception under section 6/5, 120 days. So he is non-resident in the year 2026-27. Now coming to coming to the tax year 2027-28. Tax year 2027-28. Okay. In that particular tax year, he comes to India for visiting purpose. He stayed in the tax year 145 days. It is less than 182 days. Then there is a, as per section 6(5), we know that there is some exception. If a person of Indian citizen or Indian origin comes to India for a visiting purpose, if he fulfills the 4 conditions, he will be treated as dream resident, that is resident but not ordinarily resident. What are the 4 conditions? He is citizen of a person of Indian origin, is a person of Indian origin, a citizen of India or a person of Indian origin, okay. Person of Indian origin, number 1. Number 2, visiting purpose, comes to India for visiting purpose, okay. And number 3, he is in India 122 days or more but less than 182 days. He is in India 145 days and 365 days during last 4 years. He was there, he was 1 to 1200 days during last 4 years. So that condition also fulfilled. And another most important condition, his total income during the tax year is more than 15 lakhs except income from foreign source, except foreign income. So we have to calculate. So this year, this 2026, we have seen he is non-resident because less than 100 days. Now we are calculating this year. So we have to calculate whether his income, total income during 2027-28 is more than 15 lakhs or not. So see, now we have to calculate his total income. Now see, for this region, these data are given. So income from salary, rent, etc. earned and received in Singapore. See the line. Income, this is foreign income, okay. And if business income accrued and received outside India, controlled from Singapore, this is also foreign income. This will not be considered, okay. So this will not be considered. But another business income accrued, raising outside India, received outside India, but business is controlled from India. Then it should be taxable in India. It should be included. Then this should be included in his total income. Interest on bank deposit in India, this should be included in total income. Any other income, this is nil. So these 2 income should be added, 11 plus 18, that is 19 lakhs. Now there is a life insurance premium paid 2,60,000. So in the old income tax act, that is Act of 1961, there is a section, there is a certain deduction is available under section 80C, that is payment of LIC premium, investment in provident fund, investment in post office, all these things. Total deducted amount eligible for deduction under section 80C is 1,50,000. So from total income is 19 lakhs less 1,15,000, then his total income is in the tax year, this is 17.50 lakhs. 17.50 lakhs. So this is more than 15 lakhs. So fourth point is his income, total income is more than This is 17.50 lakhs, more than 15 lakhs, more than 15 lakhs. So all the four conditions are satisfied. So Mr. X is resident. Mr. X is a deemed resident. मतलब he is resident but not ordinarily resident in the tax year 2027-28. Okay, understood? I repeat. Mr. X in India comes to India for visiting purpose, and he was in India in the year in the tax year 2027-28, 145 days. We know that as per section 6 subsection 5 that an Indian citizen comes to India for visiting purpose. If four conditions fulfilled, then he would be treated as a resident person but not ordinarily resident. What are the four conditions? He should be a person of Indian origin. He comes to India for visiting purpose. He stayed in India at least 120 days in the tax year and 365 days during the four preceding year. He stayed in the tax year 145 days and 1200 days in the last 4 years. That condition also fulfilled, and last condition is his total income should be more than 15 lakhs. In that case, his total income is 17.50 lakhs. How to calculate the income? In calculating the total income, foreign income should not be considered, but income raised outside India and received outside India, but that business control from India would be taxable in India. His total income is 88 plus 11, that is 19 lakhs. From that 80C section, now it is in the current income tax act 2025, 80C section mapped as section 123. So total deducted amount is so 18 plus 11, that is 19 lakhs less section 123, 1.50 lakhs, that is 17.50 lakhs is total income during the tax year. So all the four conditions are satisfied. So we would be in the tax year 2027-28. Mr. X is resident but not ordinarily resident. There is a point is here. So would it make any difference if X is a foreign citizen but his grandfather was born in a village near Karachi in this? So if grandfather of X was born in undivided India and X is a person of Indian origin, even if he is a foreign citizen. Okay, so law is that if a person of Indian origin, if he himself or either of his parents or either of his grandparents was born in undivided India before 1946, he would be treated as a person of Indian origin. So far, we have discussed the residential status of an individual. Now, what are the residential status of companies? A company would be treated as a resident in India if it is an Indian company. Matlab, if it is registered in India, then it should be treated as a Indian company. Or if its place of effective management, POEM, place of effective management is in India, during that tax year, it would be treated as Indian company. Okay. What is the residential status of a firm or an association of person under section 10(11)? If its control and management office appears situated wholly or partly in India, then a firm or association of person would be treated resident in India. Okay, so this is in case of companies and a firm, the residential status. Okay, so this is all about residential status and tax liability. If you found this is helpful to you, then support my channel and hit the subscribe for more and more videos on income tax. Thank you.